Hello friends, welcome back to another lecture. I hope all the concepts which we have learned till here are clear to you. If not, then please revise them again since we will be using those concepts in the trading strategies which we are starting from this lecture. Now this first strategy is Bollinger Bands plus RSI divergence trading setup. As I said earlier that Bollinger Bands gives best results when used in conjunction with another technical tool, and RSI works really best with Bollinger Bands. I hope you are familiar with RSI and also RSI divergence. If not, then I have added an additional lecture on RSI divergence in bonus section of this course. Watch that lecture before moving ahead if you are not familiar with RSI divergence. So friends, the strategy is really simple. Let's discuss the rules for long entry. First of all, this strategy works well with 1 hour, 4 hour and daily time frame. Next, we are using default Bollinger Band and RSI settings here. Now, after this, look for contraction in Bollinger Bands or a Bollinger squeeze after a previous downward movement or a downtrend. Next, if this contraction or squeeze is accompanied by a bullish RSI divergence, then wait for a long green candle to break the upper band and next take entry at the candle next to the breakout candle. Now you must exit when price hits this mid-moving average line. So friends, I hope the rules are clear to you. So let's dive into some charts to get the clarity on the rules and trading setup. Now the first chart is of Euro USD currency pair. Just notice this contraction in Bollinger Bands after the previous downtrend and look at the price action. Price is making lower low at these 2 points. But when you look at the RSI, it's making a higher low, which in fact indicates a bullish divergence. So friends, this adds a high probability that markets may reverse from here. But we need a final confirmation from the breakout from this Bollinger squeeze, and that is given by this long green candle. This has given us the signal to go ahead with the trade and we can take entry at this next candle. That is here. As per rules, our exit will be here where the price hit this mid-band or this moving average line. So you can see this was an average profitable trade. Then next we have this chart of stock ITC. As you can see here, there is a contraction of Bollinger Band after a downtrend, and this contraction is accompanied by a bullish divergence. Just notice price is making a lower low while RSI is making a higher low. So this validates our trading setup and we are all set to make an entry at the long green candle, which gives a breakout above the upper band. As you can see, our confirmation is given by this green candle. Now friends, some of you will raise a query that how to decide which green candle is long and which is short. Or which candle should we consider as a valid breakout candle? Well friends, always consider length of previous candles while judging whether it's a valid green breakout candle or not. Normally we don't find long green candles during contraction phase of Bollinger Bands. And you can very easily make out which candle to consider as a valid breakout or not after practicing some charts. Again, backtesting is very important in any strategy. Live trading is way different than paper trading and you must practice a lot of charts before practically implementing any strategy into your live trades. Again, in this chart, if you are not sure if the breakout candle is valid or not, then this another long green candle would have cleared all your doubts. And you can easily call it a breakout candle. Now the price hit mid-moving average line here, so you can see we got good returns in this trade. Next, let's see a final chart. Now this is the chart of the stock State Bank of India and just notice this contraction in Bollinger Bands after a downtrend. Also note price is making a lower low here but RSI on a contrary making a higher low, which indicates possible reversal, that is RSI divergence is there. So Bollinger Band contraction plus RSI divergence, which are both signals of future correction or reversal and thus makes a very high probability trading setup. So we will just wait for a breakout above the upper band. And this long green candle gives that confirmation. And we will take our entry here with exit at this level where the price hit this mid-moving average line. So you can see it was a good profitable trade. But friends, please note only aggressive traders can take entry at opening of this long green candle as well. Now can you tell why? Well, read the price action carefully here. This candle had a huge gap up opening and this clearly indicates huge momentum. Previous day candle closed above the Bollinger band and today we had a gap up opening and that too outside the upper band. So if you can read the price action really well, then you could have even taken your entry at the opening of this gap up candle and increased your profit margins. Friends, I hope the long entries are clear to you. Rules for short trades are simply reverse of long trades. And I hope by now you can easily make out the rules yourself. If you face any issue, then you can simply message me and I will surely clear the steps. But friends, I personally use this setup for long entries only. And I found this strategy works pretty well for long trades. And the reason being, rallies after a downtrend tends to be pretty long, but the correction after an uptrend are generally short.